In February, we achieved FDA approval for the Eversense E3 continuous glucose monitoring system. With this important step, we have now extended the duration of the longest-lasting CGM system to 6 months of wear in the U.S. Not only is this the longest-lasting CGM by over 12-fold, but it also offers patients top-tier glucose measurement performance with a high degree of accuracy. I've spent time in the field recently to engage with HCPs and patients as part of the E3 launch. In the first week of April, at the insertion of our first 6-month commercial patient in the U.S., which was performed at the impressive East Alabama endocrinology practice, it was clear how the E3 system represents a major advancement for people with diabetes. Patients, both new to CGM and those experienced with CGM, continue to seek alternatives to the limited choices of short-term transcutaneous sensors that exist in the market today. 6 months of wear, which means just 2 insertion procedures per year, makes E3 even simpler, more convenient, and less expensive for patients. Interest in our long-term CGM is high, and we're excited about the opportunity to help this large and important population with the revolutionary benefits of E3. We continue to believe each advancement we achieve in sensor wear duration represents a stepwise evolution in product differentiation, market penetration, and market expansion opportunities for Eversense. For revenue, Senseonics generated $2.5 million, which included $0.8 million from the U.S. and $1.7 million from Europe, as we wound down the current generation products. The first quarter results were notably driven by inventory transition plans to the new E3 product. As Senseonics maintains focus on the design, development, and manufacturing of the innovative CGM systems, our global commercial partner, Ascensia, is implementing a comprehensive commercial strategy to launch the 180 product in the U.S. While it is still early in the launch of E3, we are just 6 weeks in, I would like to outline key elements of our strategies and initiatives and share some early impressions from the past few weeks as we have worked with Ascensia to roll E3 out to the physicians and users in the U.S. In the first half of the year, ADC will be primarily focused on transitioning current users to the E3 system, expanding new patient and clinician adoption, and ensuring continued patient access through the payer transition from 90-day to 6-month insurance coverage. In just 6 weeks following the FDA approval, we delivered the E3 system to HCPs for the first sensors for insertion. This demonstrates the operational integration across the Senseonics-Ascensia collaboration, as well as HCP and patient excitement for the new product. Ascensia executed distributor contracts, trained the sales force on the new label, as well as the new patient assistance programs, and initiated product introduction with HCBs. We believe these initiatives and programs will enable Ascensia to serve more patients and providers. We are pleased with the swift commercial readiness of the new and growing dedicated CGM team in the U.S. The ADC reps are incentivized to transition existing patients to E3 and new patients, and to increase the number of certified inserters to support patient demand. We're also excited that they have hired Rudy Toms, the former Senseonics head of sales, to lead the U.S. Eversense sales and marketing activities for Ascensia. Since patients have the ability to choose the CGM they would like to use, the DTC advertising promotes product awareness and familiarity at broad scale. This has proven to be an effective and efficient tool for generating patient leads in geographies with the highest insulin prescription concentrations, where coverage for Eversense continues and currently exists, and where there are active inserters. We are pleased with the early indications that this targeted approach is generating positive impressions and lead generation. On the professional marketing front, Senseonics and ADC are both actively participating in all major diabetes industry meetings and conferences. The ATTD conference in Spain just 10 days ago was successful with robust HCP engagement. Energy was high as the diabetes community was excited to meet again in person. The team was pleased with the many opportunities to interact live with attendees and introduce them to Eversense. Booth traffic was strong as HCPs demonstrated interest in gaining a deeper understanding of E3 and the incoming improvements to the 180-day product. Clinical training managers were very busy providing product demonstrations, and we were pleased with the engagement at the product symposium. We also plan to have a significant presence at the upcoming ADA annual meeting in June. This is the largest diabetes conference of the year and a great opportunity to introduce HCPs to the new E3 system and share clinical data that supports the value proposition of our long-term implantable CGM. At the ADA this year, there will be a booth highlighting E3, a product theater, 2 presentations on the floor of the exhibit hall, and 3 posters presenting clinical data, including our first data from our pilot 365-day sensors. Regarding patient access, ADC is actively engaged with payers to transition coverage and payment mechanisms from the E3 90-day sensor. We are pleased with some of the early progress, such as Aetna and Humana's immediate inclusion of E3, as well as ADC's interim solutions to ensure patients previously covered for the 90-day sensor will have no limitations or delays obtaining E3. Positive discussions with Medicare are ongoing, and we are confident both our commercial and government players will continue to recognize the strong value proposition of our implantable CGM. As we described in the last call, Ascensia has implemented an updated patient assistance program that offers E3 to any patient with commercial insurance coverage for a $99 out-of-pocket maximum cost for their first E3 sensor. We believe this is a very enticing program that should attract patients to Eversense. Ultimately, this is an investment to drive adoption and increase the user base. We expect patients new to CGM to try the product and for users on other systems to convert to the benefits of Eversense. Following a patient's first E3 sensor, their out-of-pocket expenses are then limited to $100 per month, with copay options providing ongoing assistance to support access. In Europe, Ascensia is implementing important strategic changes and investments to provide the higher touch patient and HCP experience required for CGM commercialization. Ascensia has been holding national sales conferences the past several weeks, attended by the various commercial country organizations. During these meetings, they are making E3 launch preparation and designing targeting initiatives. The E3 system is currently under final review by our notified body in the EU to achieve the CE mark. We anticipate launching E3 in Europe early in the third quarter. In research and development, progress on our 365-day sensor configuration continues as well. Human pilot clinical testing is underway, and we continue to be encouraged by the product performance.
U.S. revenue for the first quarter was $0.8 million, and revenue outside the U.S. was $1.7 million. Gross profit in Q1 2022 was $0.5 million, in line with gross profit of $0.5 million in the prior year period. First quarter 2022 selling, general, and administrative expenses were $7.9 million, an increase of $1.3 million compared to $6.6 million in the prior year period. The increase was primarily the result of increased professional fees and payroll and related expenses. Research and development expenses in Q1 2022 were $7.8 million, an increase of $2.5 million compared to $5.3 million in the prior year period. The increase was primarily due to the expansion of our R&D headcount, an increase in clinical studies, lab supplies, and an increase in outside expenses to further advance our product pipeline. For the 3 months ended March 31st, 2022, operating loss was $15.2 million compared to $11.3 million loss in the first quarter of 21. The decline in the company's share price at the end of the first quarter as compared to the company's share price at the end of the fourth quarter of 2021 led to significant non-cash gains in Q1. As a result, total other income increased by $340.1 million compared to the prior year period, primarily related to non-cash charges resulting from the accounting for embedded derivatives and fair value adjustments related to the company's financings, including the 2023 and 2025 notes, along with the PHC 2024 notes and Energy Capital equity line of credit. For the 3 months ended March 31st, 2022, total net income was $86.7 million, or 19 cents per share, compared to a net loss of $249.5 million, or 68 cents per share in the first quarter of 2021. Net income increased by $336.2 million due to the accounting for embedded derivatives and fair value adjustments previously mentioned. As of March 31st, 2022, cash equivalents, short and long-term investments, totaled $166.9 million. Turning to our outlook for 2022, we continue to expect our full year 2022 global net revenue to be in the range of $14 million to $18 million we communicated previously. As transition of payer coverage policies occur from the 90-day to the 6-month product, we expect gross margins to approach break even in the fourth quarter. For the full year 2022, net cash used in operations is projected to be in the range of $65 to $70 million. We expect the majority of expenses in 2022 to be for research and development, for ongoing feasibility, and pivotal clinical trials for additional products in our product pipeline, including the start of the 365-day pivotal trial subject to IDE approval.
As we transition into providing our E3 product to people with diabetes, we are excited to continue the commercial rollout of our 6-month product in the U.S. through the second quarter and the expected launch across Europe in the coming quarters. This next generation of product is an exciting advancement in diabetes management. We believe our patients and providers have been waiting for such a product, and we are eager to now bring them the benefit of an improved version of the world's longest-lasting CGM system.
I wanted to start with the first 6 weeks of E3 commercial launch. Obviously, it's early days, but beyond new patient ads, what are the leading indicators or metrics are you tracking, whether it's website traffic, physician interest? Is there anything you can share that gives you confidence in the 2022 commercial outlook?
Yeah, Colin, it's really driven by the patient and physician interest. As we noted, the DTC has ramped meaningfully by Ascensia, and the leads that they generate based on the request for information is very meaningful. Factly, it's higher than we had anticipated, which is, of course, very encouraging news. Additionally, through the professional channel, that being the doctors that treat the patients, we do see a notable rise in that interest as well, as many doctors. We're certainly waiting for the 180-day launch, so their interest is important and positive for us as well.
Great. And you've talked about each duration advancement being a stepwise in market penetration and market expansion, those opportunities. Is there any way you could frame the size of the E3 opportunity, maybe relative to the market you addressed with the 90-day product?
Well, we certainly, anticipated being significant growth. It is a big market, as you are certainly aware. There are still a number of people that that are not on CGM that can benefit from it. We see about a third of the people that have interest in Eversense are folks that haven't participated in CGM before, even though they need to. So we expect that there will be both a share transition from the existing players, which is about a global $7 billion market, as well as the growth of people that aren't on it yet. So we look it to be notable.
Maybe I can start here on some of the conversations with both commercial and Medicare. It sounds like some early wins here. I was just wondering maybe if you could provide any additional color on maybe expected timing or pace of additional payer transitions to E3.
Sure. We look at it as a continuum. You did see that we had some very early wins immediately. We saw folks like Aetna and Humana went right over to the 180-day product. There are others that are in the process as well. We've had active conversations with Medicare, and we do anticipate that they'll be putting some plans in place that will allow us very quickly in the next couple of months to transition to the 180-day product for the Medicare patients. So we do expect it to happen fairly quickly in the next quarter or two, but we do fully recognize that there are some payers that do annual updates, and it may be as late as fourth quarter or so. But we do expect it to get the transition done, the majority of it, in the next